What we're seeing in silver is different than anything I've ever seen in this marketplace. The LBMA silver free float now stands at the lowest level in recorded history. Silver's time is coming. It's here. It's disappearing. The big banks are very, I think, concerned about this development where they're now being challenged by very sophisticated, wealthy players. It just seems like this might be the time that we've all been waiting for.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 14th through July 21st, 2025, while supplies last. This week, we'll swap any silver bars you have into junk silver at just a 2% fee. That's right, any silver bars or rounds that you have. We'll buy back at 2% under spot and swap into junk silver at spot with the proceeds. It's a quick and easy way to move from large quantities of bullion into junk silver at the lowest cost in years. To order our specials or any of the many other options we have available, call us at 1-888-815-4237. That's 1-888-81-LIBERTY. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're back for the weekly market update every week with Miles Franklin CEO Andy Schectman. He's joining us today. We're recording this on July 14th, and it's being recorded for Wednesday, July 16th. Andy, thanks for coming back on Liberty and Finance.
Good to see you, Dunagun. Was nice to see you last week in person, but good to see you back again.
Yeah, nice, sharp studio you got there. Everybody's been loving it. And I got to remind everybody that this idea, the very concept of a weekly market update, was your brainchild. You said, gee, maybe we could just do a quick 15-minute hit every week. And as usual, 15 minutes turns into more because there's just so much to talk about.
Name in 15 minutes, Dunagun, so that's my fault. But it's nice to be with you every week for sure.
I don't even think I could get the date right in 15 minutes.
You almost stumbled there. People only knew the number of takes that we've had to do over the years where you stumble and I laugh and then, okay, I'm going to do it right this time. Be funny to do a bloopers reel and show that, but
yeah, I would.
Well done this time.
Hey, we want to talk about several things today. I'm going to list off some so people know what's coming up in rapid fire here. We're going to talk about silver on the move and how and what that signifies, what else we're seeing around the silver market. We're also going to talk about an interesting document that our comrade George Gammon discussed, a U.S. Treasury document outlining the actual process by which there's a gold reevaluation account. You've talked to us about that before, but they actually outlined some details of the accounting procedure that could be used to revalue gold to basically wipe out the U.S. debt. We're also going to talk about the impacts of Trump tariffs, or if you want to call them sanctions, and what they're doing to the economy of the world in general, balance of trade, and perhaps precious metals impacted as well. Talk about the outcomes from the BRICS meeting that just concluded in Brazil. What were the outcomes that we were maybe looking for, what we got, and who were the no-shows, and then special from Liberty and Finance exclusive special, just a teaser. It has to do with being able to swap silver bars and rounds for U.S. mint lineage coins. So let's jump back to the beginning. Silver on the move. Andy, this is something that anybody who's been paying attention has been noticing is a big deal. Can you tell us what you're seeing and what you think it signifies?
Yeah, well, I mean, it seems to me that the silver market and maybe the platinum market are under stress. And if you look at that chart that Ed Steer provided you way back when that we've talked about the short positions, silver and platinum are the number 1 and 2 most shorted commodities on the COMEX market. And it seems like, and again, I don't want to get too excited because we've been through this so many times, the little boy who cried wolf, we always know that the wolf does come, but it seems like the paper futures market prices kind of disconnecting from the physical prices after all of these years. And what you're seeing really are traders rushing to secure physical metal, possibly to avoid, risk if physical shortages worsen. First of all, obviously, this is a very bullish environment for metals and could trigger more volatility. But in general, what we're seeing in silver is different than anything I've ever seen in this marketplace. So you have guy named Daniel Gali of TD Securities, where he argues that the outflow of silver caused by the tariff arbitrage, and I don't think it's just a tariff arbitrage, that's what they want us to believe, has left inventories of freely available silver critically low. In fact, the LBMA, the London Bullion Metals Association, silver free float now stands at the lowest level in recorded history. So this is the most influential silver market on the planet, the LBMA, and it's at its lowest level of silver holdings ever. We've talked about this, Dunagun, ad nauseum, the drawdown in silver off of the exchanges. And he writes, the so-called free float of inventory at the LBMA has dropped to just 155 million ounces. That's less than a single day's worth of trading volume for spot silver in London, and it makes an unprecedented squeeze in the world's most important silver trading hub. The result is a dramatic spike in the cost of borrowing silver, with 1 month lease rates soaring as high as 8%, and a level almost never seen in this market. If you have to pay 8% to lease the silver in order to cover a position, you're in big trouble. And, David Jensen, who does a masterful job of talking about what goes on in the LBMA, says that they're actually trading about 1.9 billion, with a B, ounces per day, 3.5 times annual global mine supply, and in this case, well over 10 times the float every single day. Now, he says that they trade roughly about 190, 200 million ounces or somewhere in that neighborhood, but those numbers are 10 times understated, as they only post the final settlement number. So when you're trading, in essence, pretty dang close to 2 billion ounces a day, and you only have 155 million ounces backing it, what could possibly go wrong? And that's the situation where LBMA has gone from T+1 to T+8 weeks, citing a shortage of manpower and trucks. Couple other things we're talking about. The last week's COT report, or this week's COT, Commitment to Traders report, just came out on Tuesday. And it's interesting. It shows that the commercial banks have 79,600 contracts net short. That's about 404 million ounces. The interesting thing is that they built this short position at or around $37.50 when they dumped a whole bunch of silver short. But now silver's over $39. These traders are freaking out, and they're bleeding hard. That shows let's see here, a silver about $2.50 higher. That would be a paper price loss of pretty dang well near $1 billion in 3 days. So not only has the silver price hit its highest mark since 2011, the banks have just set a new record for the largest short position ever in the history of the COMEX market, ever. And they're underwater $1 billion in 3 days. Now, the silver EFP, which is the exchange for physical, surged by 250% in the last couple of days. What does that mean? That means that it's the cost to swap physical silver for futures has skyrocketed by 250%. This increase would signal massive stress in the silver market. It means that traders are scrambling to find any silver they can, which is in short supply on that level. And this is a major move that would typically only reflect massive tightness in the physical market or a lack of trust. And that's a scary thing. So you have skyrocketing lease rates. Lease rates are between 6 and 8%, very high. And by the way, platinum lease rates just popped up to 18%. That's extremely high. It says extreme tightness and extreme demand for physical to metal. You also have the gold EFP rates that just jumped up $4.50 just yesterday. That's another sign of dislocation and demand for physical delivery. So when you got gold and silver and platinum lease rates blowing up, you have the exchange for physical rate blowing up, you have the T+1 going to T+8 blowing, or 8 weeks blowing up, and on and on and on. This is a sign that we hadn't begun to see where this market ultimately goes. And, you have these big traders that are heavily short and expecting prices to fall, but the market goes the other way. It's a scary thing. And at the same time, you have all these premiums jumping. This has to have the banks rattled. Couple other things that I noticed over the weekend. David Bateman. Are you familiar with who that is, Dunagun?
I haven't followed him.
He's a billionaire. And I want to read something to you because I think it underscores some big money, right? So we've talked about that since the beginning of the year. The insiders, the institutions, the institutional traders have been selling equities every single week. Since June, they've been averaging about $2 billion a week selling. At the same time, ma and pa retail investors have the largest allocation ever to equities. It's even greater than the dot-com bubble. So what could possibly go wrong there? The insiders, the Buffett sitting on the sidelines with $500 billion, the selling by Jamie Dimon and Bezos and Zucker, they're all selling, and the institutionals are selling at a 6-to-1 clip to buying on the insiders since the beginning of the year. 6 sales, 1 buy by the insiders who know the trajectory of their business. None of that's good. At the same time, you have on the COMEX level and the LBMA level, which reeks of sophistication and inside info and money, they're ripping metal off the exchange at a level that's never been seen before, the lowest level of silver ever in the history of the LBMA, and the largest deliveries ever off the COMEX. Not a good thing. That's done by institutional traders. On our level, me and you, we see most of the retail public has no idea what a gold or silver coin is. So you look at the dichotomy. The insiders are selling equities and buying commodities and standing for delivery, while the retail public has nothing in the way of commodities and is all-time record in equities. What could possibly go wrong? Okay, so I want to read you something David Bateman wrote. He's a billionaire. Here are the reasons I invested close to $1 billion in precious metals over the past 6 months, including the purchase of 1.5% of the annual global silver supply, 12.69 million ounces. Here are his reasons. The global monetary system is about to collapse, the Great Reset or Basel Endgame, he mentions. The biggest credit bubble in history will soon pop, $300 trillion. There is no way the U.S. can refinance its $28 trillion in maturing treasuries in the next 4 years without an obscene amount of printing. Trump tariffs are hastening the collapse, and it's by design. Now, I've talked about that a lot lately, that I wonder, could it be by design to lose the reserve status? Interesting, he says it. Gold and silver are the only meaningful life raft. Physical possession is everything. The whole world right now is a sophisticated game of musical chairs. The chairs are precious metals. He says crypto is a psyop. Those who purchase will have no chair when the music stops. Real estate, crypto, stocks, and bonds will all lose significantly compared to precious metals. The banking system has been meticulously designed to seize your assets to buoy a collapsing banking sector. See the great taking. You have zero counterparty risk with precious metals in your own possession. I'm up 20% already on most of my purchases. This is not a drill. Your grandkids someday will either muse or lament this financial decision you're now faced with. Don't fail them. And that's coming from David Bateman, a billionaire who just spent $1 billion on precious metals. So I want people to understand that this is a change. And everything he said is what you and I have talked about, almost verbatim. Not always in that sequence, but we've talked about all of that. And the biggest thing to take away from it is he is recognizing that the biggest money in the world views the counterparty risk as legit. So he's buying it, he's standing for delivery, and he's saying the things that other people at his level don't really say, but you can see by their actions. Selling equities, accumulating physical, de-risking. He's saying it. The others are doing it and not saying it. And I give him a lot of credit and respect. Love to get him on our show and talk to him, but doubt that will happen. But at least on Twitter anyway, he wrote the reasons why he put nearly $1 billion into precious metals. And I think the same thing is true when you see these deliveries at the level of sophistication it takes to deliver off COMEX or LBMA. You're talking the biggest money in the world, the most tied in money in the world, the most sophisticated money in the world, the most well-informed money in the world. As he said, your grandkids, don't fail them. I would say that that's legit. I do. I think that's legit if things play out the way I think they will, ultimately, the way he thinks they will. And that's what we're seeing at the highest levels right now.
I want to underscore another point you made along the way about the metals being tight in the exchanges, and the banks being in a difficult situation if they're going to try to cover the largest short position ever. I'm going to hold up this pen because this is the one I got from Keith Neumeyer last week when I interviewed him in person at the Rules Symposium. And he said, we're going to do everything we can to contribute to not cooperating with a corrupt system. You can call it break the system, or he says they're going to do everything they can to expand the portion of First Majestic Silver. And First Majestic is one of the largest pure silver companies out there that they are putting through their first mint. So they take it, directly from the mint, get it into doré, refine it themselves, get it into their bars, and sell it directly to the public. He says we're just doing everything we can to increase the percentage over the next year plus that's not going to be making it onto the exchanges, because he recognizes how counter to benefiting the actual industry participants the exchanges have become. They're certainly working for higher masters.
That's called disintermediation. And in other words, you disintermediate the players in the market by going directly to the end user. And that's great. A lot of companies don't have the wherewithal to do that financially. Keith does. And I spoke with him about that too, and I really respect that. And on a larger scale, isn't that what China is doing? When they go directly to the miners in Latin America and buy doré and concentrate, send it home and refine it for the end users, rather than letting it go through the channels and pulling it off of the exchanges, which then is very transparent. By disintermediating the market, you are taking out of the equation. You see, the way that this normally works, and the reason that the bullion banks have so much sway, is that mining is very expensive. And for many years, the mining companies have really suffered with, lack of a market that was cooperating, prices that were muted, and really not much interest by the public. And so they suffered. Well, when they pull stuff out of the ground, it's very labor and cost intensive. They will call a bullion bank like JP Morgan and say, we got X amount of tons of doré. What do? They'll say, ship it to this refiner. We'll have a wire in your account in 30 minutes. So they get paid like that. They ship it off. Now it's in the hands of the cartel, so to speak, who can refine it and then put it onto the marketplace on COMEX or whatever and do what they want with it. So what Keith is basically doing is saying, screw it, I'll just refine it myself and sell it directly to the public. I'm not going through a bullion bank. I will disintermediate the process, go right from the ground to the end user. Well, that's what China's doing. And I think it's very shrewd. And but it underscores what China is doing, in my opinion, when you look at it the way Keith is doing it. And it gets out of the equation not only the ability of the cartel banks to hold it, possess it, short it, manipulate it, but in the case of China, it keeps all of the information out and it disintermediates the pricing of it, because the metal is coming off of places that don't affect the price. So in either respect, whether it be Keith doing this directly to the public is good for all of us and ultimately good for Keith. But when China's doing it, I think it's good for them, and it allows them to continue to accumulate stuff without the prying eyes of the IMF and without it being reflected in price on COMEX or the LBMA. And quite frankly, I don't think they care about price. This isn't about price as much as it is disintermediating the information.
Well, it gets back to that very apt metaphor. That's one that we've been using for years here, talking about, which, you mentioned the letter you were reading that said it's a game of musical chairs, and all of those chairs are who has the physical, who has possession. It gets China's hands on the physical without without a counterparty in the middle who can cut off their access.
Well, not only that, if the price goes up because they know they're accumulating it, this is what attracts everyone. People are attracted by price. Most people don't have the patience or the ability to sit and learn from guys like you and I and get out in front of it before the price moves. So when the price goes, silver is what's called inelastic, meaning it's used in industry and it's needed in industry. It can't be substituted, but it's used in such small amounts it doesn't materially affect the price. If you have 1/5 of an ounce of silver in an iPhone and silver triples, it's really not going to matter that much to the ultimate price of the iPhone. You still need it. But if more and more people notice a higher price, they all start buying it. And that is what the big players do not want. where they get shut out of the global supply because everyone runs to it. The cartel has done a great job at suppressing price, but by suppressing price in a way that, with great volatility and counterintuitive to the times, it disenfranchises people. You look at all the people who bought silver during the silver squeeze that got pissed off because it didn't do what they thought it would. And that's cartel work in action, where they held it down when it really, if price discovery would have been allowed to happen without 8 banks holding the largest concentrated short position in the history of the COMEX, well, then the price would be much higher. But you can see that's now broken because the LBMA has the lowest silver float, 155 million ounces, that they've ever had, ever. That's 1 day worth of trading. And we're supposed to believe that it's a shortage of trucks and manpower why people can't get their bars for 8 weeks. As you can see, they've been caught with their pants down, and they're this close to the whole thing breaking. The masterful part of what China has done through all of this and all the BRICS nations is not gobble it too quickly, because it would have broken the system like that. Instead, they've been doing the little by little by little and pickpocketing it every way they can since you and I started talking about this 5 years ago, and it's coming to an end. And again, I do believe it is, which will ultimately signal, perhaps, I don't want to get out in front of my skis, but perhaps this is the beginning of the end of the manipulation of the metals market. You could argue it's almost already here with gold, but look at silver. They hit it again today, and it's back up. It's barely back up, but they can't keep it down. We got futures at $39, and I don't know, if you look at the so-called resistance between here and 50, there's some at 41 and some at 42.50, or right in that range. But that so-called resistance, cumulatively, if you look at the 1980 peak and the 2011 peak, they were both quick peaks, right? Those two levels were maybe 1 to 2 days of trading, period, over the last
45 years.
50 years, 40 years. That's not resistance in my mind. That's just a stopping point on the way. It would signal to me there would be resistance that would be easily taken out. And once you get above 50, the sky's the limit. Now, if we just were to take the price of gold today and divide it by 45, which has pretty much been the average price of the last 150 years, if we woke up tomorrow and saw silver at, divided by 45, $79, that would be where it should be on a 150-year average basis. But as Keith will tell you, it's coming out of the ground at 6 to 1, not 45 to 1. So you can argue that price is 11 or 12 times under what it should be based upon its geologic footprint in relationship with gold. I mean, all of this is theoretical, but any way you look at it, silver's time is coming. It's here. It's disappearing. The big banks are very, I think, concerned about this development, where they're now being challenged by very sophisticated, wealthy players. It just seems like this might be the time that we've all been waiting for here, heading into the second half of the year. See where silver ultimately ends up.
Another part that you didn't just mention now, but you mentioned earlier, was that we are in what's called distribution mode in the stock market. So that's where strong hands, the deepest pockets, are unloading. They're quietly distributing their large holdings of, like, the high-flying Magnificent Seven and so on. Even the insiders, as you pointed, the people who are at the very top of those companies, they're distributing out from concentrated ownership to the retail buyer is picking up the small side. And you're seeing the exact opposite. So you got the exact opposite thing happening on gold and silver. You've got these big, sophisticated players who are finding paths to take concentrated physical positions without tripping the tripwire of the price mechanism too fast. That would wake up all the patsies, the retail buyers who are still being told, they're still being sung the lullaby sleep song from their retail investment advisors and everything, saying, the stock market always comes back, just buy, hold. You hear Robert Kiyosaki, we were with him in person at the Red Pill Expo in Hartford, Connecticut, and he was talking about we just keep getting, the moms and pops of the world keep getting told the exact same thing. hold a well-diversified portfolio of stocks, bonds, and real estate and ETFs, and you'll do just fine. You'll always ride out. You always get 7% on average throughout the years, and you can even you can even buy the dips and keep on. And so you have the retail public who are playing the patsy side on both of these. They're getting the stocks distributed to them, and they're not participating as these well-informed and concentrated buyers are on the physical metals. So the right move is being made. And you told us about the little man rule. Maybe you want to reinforce that again for our audience. What is the little man rule?
Just the little guy is always late to the party and moves after it's been reinforced by the insiders. That's why so few people ever succeed in investing, because they follow the herd and the little man is part of the herd rather than stepping out on the branch all alone with the cold breeze on your shoulder. I want to mention just a couple other things while we're on the topic. And I think that, you could call this concerning for the dollar, but you could call it very bullish for precious metals, because most of the other currencies around the globe have been lowering their rates, right? And you hear Trump freaking out that Powell hasn't done it. And since the U.S. has not lowered rates, the currency in a normal situation would be rising with high rates, right? And everyone else has low rates. So more people buy dollars to, because of a strong dollar and of high interest rates. They would take advantage of that. But it's an ominous sign, in my opinion, that the dollar has been falling instead of rising. And if rates remain high, which are still historically low, the government expenditures for interest rates will continue to skyrocket. And this would cause, who knows, the anticipated crash to happen quicker. If rates are lowered, it could cause inflation to ramp up faster than anyone is anticipating. This is how they're caught. But the fact that they have higher rates than just about everyone and the dollar is falling is an ominous sign, in my opinion, for the dollar, for sure. And a very, very, very bullish sign, if you will, for precious metals. But you know what this all boils down to, Dunagun? It's that people in the U.S. seem to think because things don't happen in a nanosecond that they won't happen. And much of the world has a different approach on this, as we were just saying, and they take the longer term approach. And that's what you are seeing happening across the globe. They're all looking at a long-term approach to set the stage for either a new monetary system, a reset, or just a new pathway to the way things are done. We see that in what's happening with the BRICS, I believe, very, very closely, very, very closely setting up a new system that hasn't been really noticed, not only by the people in this industry to the degree that I think they should, but maybe even not even noticed by President Trump when he speaks of the BRICS. I think they're kind of using the back door to it, and I'd love to, if we have time, explain it with the new bridge technology, just an idea that I have.
Yeah, sure, go ahead.
So, in essence, he's threatening again, right? I'll add another 10% if any of these countries decide to, join on with the BRICS. And by the way,
hey, at least we're not doing what was done in the past, and that is, heads of states would just disappear if they joined if they basically divested their interest in the U.S. dollar and said we're going to a gold-backed dollar. That usually caused an unfortunate accident. So go ahead.
Yeah, well, it's getting hard to do. By the way, 10 new countries have joined BRICS as official partner countries for this. This came out. Belarus, the national state of Bolivia, Kazakhstan, Cuba, Indonesia, Nigeria, Malaysia, Thailand, Vietnam, Uganda, Uzbekistan. These countries represent 55% of the world's population, 45% of GDP, blah, blah, blah. One of the things that I think isn't being talked about enough. Now, we talked about the M Bridge. We talked about how it's now, they connected it to the 11 Asiatic countries and the 5 Middle Eastern countries. We talked about that. And I referenced in my presentation with you the other day, putting it in context with the Belt Road and all of that stuff. But I've been thinking about it a little bit more. And Trump is focused on a BRICS currency, right? This is what's upsetting him, even a BRICS settlement currency. But what has China done? They have started building their vaults, this multinational, multi-regional vault. Well, not multi-regional. It would be a distributed set of vaults through different countries, okay? And we talked about that just a few days ago on our last show together. But the way that they're doing it is to internationalize the yuan. You're not hearing of the unit token. And remember, Dilma Rousseff, the president of Brazil, said we agreed on, former president of Brazil, and the head of the BRICS New Development Bank last year said we've agreed on a new settlement token for the BRICS called the unit. Well, that's gone quiet, right? So they roll back out the M-Bridge, call it a different name. They connect these Asiatic countries. They talk about internationalizing the yuan for the Belt Road, okay? So the yuan right now is now convertible to gold on the Shanghai Metals Exchange in yuan, not in dollars. So it's not backed by gold, but it's redeemable in gold. This is a big deal. So it's not like it's replacing the currency, it's replacing what backs the currencies. In this case, it would be the Treasury if we were using the US. So all of these countries, in other words, can trade their goods for yuan over the bridge network, which is not compatible with the dollar, the pound, or the euro, and they can then convert into gold for whatever amount they want, whether it be just imbalances or all of it, right away. And this multi-jurisdictional set of vaults that they're building, they've already done the one in Hong Kong, and now they're going to do the one in Saudi Arabia with more on tap in Africa and the rest of Asia along the Belt Road. They're going to internationalize the yuan. And so Trump never said that China couldn't do this. I believe Xi Jinping said, screw it, we'll do it then. And what they're doing is, in essence, the beta test. And the beautiful part about it is that it's not a BRICS common currency. It's China doing it. But if you're building the rails to this entire system using M-Bridge technology, how hard would it be for them to, once it's operational with the yuan for gold, how about they then just bang, switch the BRICS unit token onto this set of proven rails? That's what they're doing. They're beta testing it, and they're keeping Trump away from getting angry about the BRICS unifying. And I thought about one other thing too, and that is, why would the U.S. be talking about gold revaluation? And why would Judy Shelton be talking about 50-year treasuries pegged by gold? Why does she say that he'll issue them next July 4th, 2026, in conversations that they've had together? Why? Well, the only answer I can think of is that they're going to sacrifice the dollar. The United States will sacrifice the dollar, but what is more important than the dollar is the Treasury. The Treasury is far more important than the dollar. The Treasury is what finances our spending and our indebtedness. So if the world knows that we are going to continue to inflate the dollar away, holding the dollar is crazy. But how do we get them to hold the Treasury without, or purchase the Treasury without letting rates go parabolic to compensate for that inflation? See, if you're going to buy the Treasury in an inflated currency, you demand a higher rate. Well, what if you offer gold that is deliverable upon maturity, which takes the place of the interest rate? In other words, this is how you dramatically lower your borrowing costs, because gold, which has doubled the performance of the 10-year Treasury, look at this year, it's up 38% and the dollar's down 10%. So if you bought a 10-year Treasury at 4.5%, you're up 2.25% so far this year, but the dollar's down 10. Gold's up almost 40. Look at last year, gold was up 40, the 10-year Treasury was up 4. So in other words, gold represents the inflation hedge. Gold would represent the interest on the bond. That's why Judy can say maybe even a zero coupon bond redeemable in gold upon maturity. This is why they were, if in my mind, they're reshoring the gold. This is why George Gammon is talking about the potential of gold being revalued just the way that we did. It is in the Treasury manual. He showed it that they can do it. We've said that. All they need to do is make it so. They just need to do it, and doesn't even need congressional approval, and it's done. And the Treasury then issues gold certificates to the Federal Reserve. It doesn't give them a call on the physical gold. It gives them a call on the fiat value of it. So in other words, the Fed holds the gold on behalf of the Treasury. They print money created out of thin air, give it to the Treasury. The Treasury gives them the certificates. They own the money for it. But now the act of doing that creates inflation and devalues the dollar. That's exactly what Trump would want in order to mitigate the debt by having a lower dollar and lots of inflation. It's a gimmick. It's an accounting gimmick. But you have a lower dollar, you have lots of inflation, and now pegging gold deliverable on it gives you lower borrowing costs. And if you start with the 50-year version of it, you have a lot of runway to let the price of gold go way higher between now and 50 years. She said that they would do shorter duration over time, but think about it. What other way in a world where we have zero fiscal responsibility? We talked about how Doge came in last week and they want to raise the ceiling to $5 trillion and they could only agree on 80 billion of cuts, which is 38 hours of trading by the U.S. of spending by the U.S. government. It's nothing, not the $2 trillion we were promised. How can we continue to find any demand for our treasuries at any semblance of low interest rates where they are right now? There will always be demand for treasuries, but at what price? At what interest rate? So instead of letting interest rates go high enough to find that demand, how about you bring back all the gold through these massive imports, month over month over month over month? We become a net importer, largest deliveries in the history of the COMEX ever, month over month. Who's buying it? Well, what if we're reshoring it? We're going to let it rise. What if we even revalue it and peg it to a treasury and make it redeemable? Now you can offer treasuries with very, very, very low borrowing costs to continue to finance the game. And then hopefully through reshoring all your manufacturing, this gives us the ability to maybe grow our way out of this mess, because as it is right now, we can't. So either way, we need to cross that Rubicon. We need to go through that pain, but by keeping our borrowing costs low, and inflating and lowering the value of the dollar by pushing gold up, in essence, you're mitigating the pain of paying off that debt. At the same time, you're lowering the costs associated with doing it. And the downside's got to give up some gold. But if you do long enough duration, maybe by the time gold gets high enough, it's much less than we need to. I can't think of any other way they pull this off without right default or blowing the whole system up. So could they be revaluing gold? I think so. Could they be reshoring it, like Judy says, to peg to a treasury? I think so. Only time will tell. But Dunagun, we are on the cusp of a new monetary system. That I do believe. Lots of crazy things. And then you put it in the context of perhaps the manipulation really starting to wane or come to an end because of these threats of delivery and low volume of deliverable bars at that level. I don't know. I just have a feeling that the Chinese curse of may you live in interesting times is going to come true. These are very interesting and seem to be getting more so by the day, my man.
Yeah, we're going to put a link to the George Gammon video. I'm going to show you what it looks like, guys, here. It's called Their Plan to Revalue Gold. It Could Happen Soon. We'll put a link to that in the description of this video.
We've been saying that for a year now, by the way, George. I just want to say that respectfully. We've been talking about this for about a year.
Yeah. And he's walking you through a treasury document that spells out how they have accounts set up, which Andy, you've talked about as well, to accomplish this. So it's interesting to see this story breaking out from multiple directions. And as you point out,
yeah, it gives me confidence that we're on the right path.
Yeah, when you see official documents that says they've got mechanisms in place and spells out step by step how they could do what you've been predicting would be, and in your discussions with Judy as well. Now, what about Trump tariffs and how you discussed how they're being floated out there as yet another wave to punish people who are countries who are participating in a non-dollar settlement currency, but you're thinking that there's ways that China is muting the blunt of that, or blunting the impact of that by looking at not a new immediately a BRICS trade settlement currency, but instead gold convertible yuan. Any further comments on that or about the BRICS meeting that just came out in Brazil before we move on?
Yeah, well, I mean, I think we covered the BRICS enough, but as far as his tariffs, you have to wonder, is he doing this? Like, I mean, look, before I comment on it, I would say that what we are seeing is it's almost too hard to make up. You have to start to wonder, are the things that are being done Are they being done to specifically drive away our friends by undermining the economy and the dollar with deficits, debt, inflation, fake money, drive away our friends with arbitrary and unreasonable demands and tariff threats, while financial authorities are distorting money data. And that's what we've talked about, the CP lie. And so it covers up systemic issues in the system. So let's keep that in mind. But why would they be doing this? Are they trying to reset the system? And it really almost makes me think like they are. You know, Vance has talked about having the world reserve currency is not a benefit any longer to our country when we're so far down the indebtedness rabbit hole. But when you look at a threat of 50% tariffs on copper, 200% levies on pharmaceuticals, 35% tariff against Canada. I mean, there's 20 countries now that face measures beginning August 1st unless they accept the terms dictated by Trump. And let me just read them here. The European Union, 30%, South Africa, 30%, South Korea, 25%, Bangladesh, 35%, Kazakhstan, 25%, Philippines, 20%, Cambodia, 36%, Indonesia, 32%, Myanmar, 40%, Sri Lanka, 30%, Malaysia, 25%, Thailand, 36%, Moldova, 25%, Canada, 35%, Mexico, 30%, Bosnia, 30%, Algeria, 30%, Tunisia, 25, Brunei, 25, Serbia, 35, Japan, 25. I mean, at what point does the world, Brazil, 50, Libya, 30, Laos, 40, Iraq, 30. On every single one of these countries, he's putting massive tariffs. But remember, what does Triffin's dilemma say? You will always run trade imbalances when you are the world reserve currency, always, because we cannot provide enough in the way of dollars to the rest of the world just through trade. So you have to export your dollar, which means your dollar is strong, the other currencies are weak, which means their manufacturing is way more competitive. So we send our manufacturing over there to save all this money and make our prices more competitive. By being the world reserve currency, we've had low prices, we've had low interest rates, and high asset prices. Low prices on goods, that is, because we send our manufacturing over there. So this imbalance that he's striking back against is a result of having the privilege of being the world reserve currency. You don't think he knows that? Vice President Vance knows that. He's talked about it, written about it on letterhead from the White House about Triffin's dilemma. So is he trying to do this? Is he trying to piss off the world so much, let me just be blunt, that they say, screw it, I'm done. And this is that moment where the reset happens. I mean, there's so much to think about, but this is not the way that I would be trying to, fix the problem by continually threatening our allies. In many cases, our allies like Japan and like Canada and like Mexico and all of these other countries with massive tariffs when we are the world reserve currency and we expect them to use the dollar. We threaten them if they don't, and we expect them to put their reserves in treasuries. So we're inflating the dollar away. We can't get our fiscal house in order. We're spending more money. Let's raise the debt ceiling again. DOGE cites $2 trillion in savings. We agree on $80 billion. We're never going to get it in order. So we're going to continually run these trade deficits. And at the same time, we're trying to now throw tariffs on the countries that we expect to take the dollar and then reinvest their proceeds in treasuries after we've already weaponized it. The whole thing is stupid as a mud wall. And it makes you wonder, is he doing this purposely? And as David Bateman said, this is all done purposely. I didn't remember reading that part when I read it, but it makes sense to me. They are doing this stuff purposely. What's the end game? I guess only time will tell. But these are the reasons you're seeing the biggest money in the world accumulate gold and silver, Dunagun, because they see it. They know it. They know what's going on. And we have to look at all the crumbs and try and put it together. And, maybe I'm stupid enough to say it out loud, but that's what I feel. It's like, okay, it was overtly too stupid to be stupid last administration. This one, not really the case, but still stupid nonetheless.
Wanted to get a chance to mention a Liberty and Finance special that we want to honor for our viewers and subscribers for this next week or as long as supplies last. And that is for those who want to get into U.S. mint lineage silver coinage, we're talking about the constitutional 90% silver dimes and quarters. If you don't have enough of that and you would like for more of your stack to be that, Miles Franklin has already been running a special on that at spot price. We're also opening up a special for Liberty and Finance viewers. If you want to swap in, trade in any silver bars or rounds. So if you have, whether they're from private mints, whether they're from foreign countries, any silver bars or rounds, you can do it ounce for ounce with a 2% premium increase into 90% silver dimes and quarters, U.S. mint lineage, face value status, and legal tender status and face value marking. If you want the same number of ounces, it'll cost 2% to do that, the same number of ounces. Or if you don't want to have any new cost put into it, we'll send you back 2% less ounces of the 90% junk silver rather than the ounces of the bars that you send in. Choice is yours. Either way, 2% either by putting additional cash in or by getting 2% fewer ounces out. You get out of the any size bars or rounds silver and into U.S. mint lineage constitutional silver at a 2% trade-off. Andy, any thoughts from you on aspects around that? There is a new clarification we've received on the reporting limit on silver bars. Rather than previously 1,000 ounces in aggregate, it looks like we're now subject to approximately a 4,500 ounce.
It's better than that. It's only on 1,000-ounce bars. So they changed the law, and it's only in what can settle a COMEX contract. So it's 1,000-ounce silver bars, and 4,500 is the limit because the bars have a 10% variability either side. And in gold, it's kilo or 100-ounce bars equaling 100 ounces. So 3 kilos or 1/100. Nothing else. Krugerrands, Maple Leafs, and Mexican 50 pesos are no longer reportable. And now that doesn't mean it's not your responsibility, not you, Dunagun, but the people. It just means that Miles Franklin will not be collecting Social Security numbers on behalf of the clients and reporting via 1099. So the only thing that will trigger a 1099 any longer would be the sale of, and the reason it's 4,500 ounces is that a COMEX silver contract is 5,000 ounces or 5 1,000-ounce bars, which have a 10% variance on either side. So between 4,500 and 5,500 ounces. And then in gold, a COMEX contract is 100 ounces, either in 3 kilo bars or 1 100-ounce bar. So anything else that we used to have to collect Social Security numbers for is not the case. Doesn't mean that it's not the client's responsibility to report it, but there will be no reporting done by you or I, which is something that is I think, it's the right move, quite frankly. And it makes this trade a lot better. It's also great if you have any of this stuff inside of a storage facility. You can't do it, unfortunately, in an IRA because pre-65 silver is not IRA eligible. But
Correct.
The only issue is getting it sent back. And one of the things that we can do for your people, Dunagun, is we get a detailed inventory of what they want to ship back. And through Federal Express, we can ship them air bills with insurance already put on it, instructions on how to box it up. Now, that's their responsibility to pay for it, but it will be a lot easier to do it that way than to send it back by registered mail. So we can even enhance what you're trying to do and make sure that the package that they're sending back is much easier on them to accomplish it without having to do registered mail, which while it's safe, it's really a pain in the rear to do it the right way.
So anybody who wants to get, first of all, the new information about new 1099 dealer reporting limits, you can just email us at libertyandfinance@protonmail.com. That's libertyandfinance, all spelled out, all one word, libertyandfinance@protonmail.com, protonmail.com. And just put new 1099 reporting in the title. We'll send you the new 1099 reporting limits. It greatly relaxes the, as Andy has explained, the number of cases that our dealers are mandated to report. It doesn't change anything about individual reporting requirements, but it does relax dealer reporting limits substantially, makes things like this a lot easier when you're dealing with a dealer about it. And if you want to find out specifically how you can get 90% silver dimes and quarters for your existing silver bars and rounds, just give us a call. The number's on the screen. We'll be happy to help you with that as well.
Yeah, awesome. It's a good deal.
Andy, anything that we can say, it would not be enough to give you thanks for spending your time each week with us here on this weekly market update. We appreciate it to no end. And folks, thank you so much for participating in this. And we're delighted to have you on again, Andy. And I understand next week you're going to be out of pocket. Is that right?
Yep, I'm going to be out of town next week, but I will be back the following week, and from then on, try and make this. I look forward to this show more than almost any. It's a cathartic expression for me. I'm able to get a lot of things that I keep inside. I'm able to get them off my chest on your show. So I thank you for letting me do that, and for everyone else for bearing with me while I do so. It comes from the right place. I'm trying my best to continue to find information that will benefit people, and it just seems that things are getting real exciting. And I don't want to be sensational in all the things that I say. I don't want to make it seem like, yeah, you got to do this now. But I will say this, beware when someone says this time is different, but boy, I'll tell you, man, it really does feel like this time is different. I don't know if that should be a chapter in The Little Boy Who Cries Wolf. Maybe it is, that this time it's different, but it feels like this time is different. I know we're getting close to the end of the book when the wolf comes, so it may not be this time, but it sure feels like it's different than what we've seen before. So everyone, thanks for listening, and Dunagun, thanks for having me, and we'll keep watching, and see you in 2 weeks with whatever the world has thrown at us between now and then.
Thank you, Andy. Always a pleasure.
You got it, buddy.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 14th through July 21st, 2025, while supplies last. This week, we'll swap any silver bars you have into junk silver at just a 2% fee. That's right, any silver bars or rounds that you have. We'll buy back at 2% under spot and swap into junk silver at spot with the proceeds. It's a quick and easy way to move from large quantities of bullion into junk silver at the lowest cost in years. To order our specials or any of the many other options we have available, call us at 1-888-815-4237. That's 1-888-81-LIBERTY. We're available after hours and on weekends, and we look forward to speaking with you.